Jim Wyckoff joins us this Tuesday. Jim, good to have you back.
Hello, Danielle. Always nice to be with you.
Jim, as we speak, gold is trading above 1305. Do you expect it to be holding these levels, or should investors not be getting ahead of themselves?
Well, Daniela, we're kind of right in the middle of a trading range in gold. The sellers are indeed being kept at bay by geopolitical issues on several fronts. That is prompting some safe haven buying and limiting selling interest, especially in the futures. Any flare-up in the geopolitical situations in several hotspots of the world, and my bias is that will be the case, is going to be supportive for gold. But right now, kind of in a holding pattern. Bulls do have a little bit of momentum. We're also in the summertime doldrums, the dog days of summer, so to speak, when much of Europe is on vacation. The unofficial end of summer at the end of August is right around the corner, and you're seeing a lot of people in the West take late family vacations. So there's a little bit less interest in the marketplace, which is also causing some sideways and choppy trading and maybe some lack of interest in many markets, including gold.
Jim, let's talk about the European data we have coming out this week. On Thursday, we'll have the German GDP, and many analysts I spoke to are expecting it to be down. Do you agree? And what could be the potential impact on gold?
Daniela, given recent weak economic data coming out of the European Union, including a weak German zoo economic expectations index this morning, I suspect that German GDP number is going to be downbeat. That's going to probably put some downside pressure on the euro currency. However, I suspect it's going to be a positive underlying factor for the gold market because of the safe haven status, the uncertainty of the euro currency's even survival. That could prompt some buying of gold with euro currency.
Jim, now before we get to your gold numbers, let's talk the gold-silver ratio. Right now it's at 65.5. How do you see it? And how do you see silver?
You know, Danielle, I really don't follow the gold and silver ratio, but what I will say is that the fact that gold has outpaced silver here recently is just mainly due to the geopolitical concerns. Silver is a fickle commodity. On some days, it will follow gold on a safe haven status. On other days, it will act like a risk asset and follow the raw commodity sector. Lately, silver has tended to follow the raw commodity sector. And if you look at the for example, the Goldman Sachs Commodity Index, it's in a steep price downtrend. Most raw commodities right now are seeing price downtrends, and that's a bullish element for gold because at least gold is kind of holding its own, whereas silver is in a near-term price downtrend.
All right, Jim, let's get to your Wyckoff market rating now for gold and silver.
Danielle, I'm giving December COMEX gold a Wyckoff's market rating of 5. We've got overhead resistance at 1328. We've got solid technical support at 1300. Well, the Wyckoff's market rating for silver is 4. Looking at December silver, we've got overhead resistance at about the 2070 area, solid technical support at 1950.
Jim, that's all the time we have. Thanks for joining us.
Thank you, Danielle. I can't wait till next time.
And we'll see you next week, Jim. And thank you for watching this edition of Technically Speaking. Email us at newsfeedback@kitco.com and register for our latest newsletter. It's a roundup of our top stories of the week. You can register at the link below. Thanks for watching.